Okay. Well, thank you, Wendy, for inviting me. It's a pleasure for me to be here and to help contribute to this amazing community. As I'm sure you guys know, English community is tough and it is challenging, and it presents its own set of um, I don't know the right word to say, but it's a challenging thing that we have to deal with the English market because in America we are very skeptical of a lot of things that sound too good to be true, and until we understand why they are as good as they are and the mechanisms behind why they are that good, it's hard to kind of take that dive. And that's kind of what I was telling Wendy at the very beginning is we need to have a good understanding of our products, especially our main products, so that we can confidently speak to other people about them. And we're not trying to convince them. We're not trying to change their mind. We're trying to show them, like David always tells us, we have to have these conversations with them and we need to follow up with them. And we need to follow up with them until they tell you to get lost or they unfortunately pass away or something like that. We don't wish for that to happen, but that's the idea of following up, following up, following up. But until we have that strong foundation of understanding, it's hard to talk to other people and specifically other English people who are very skeptical about life insurance, skeptical about, whenever you say something about really good returns or, 0% is the floor, they don't know how to process that because, it's not part of our education and most people have not heard about these things before. So tonight I hope to bring some of that stuff to light for you guys. I've got like 30 slides here and I'm going to do my best to get through this between 60 and 90 minutes. I'm going to talk a little bit faster and get through as much as I can. If you have a notepad, take notes. I highly recommend you write down any questions. We can use the group me to answer questions. If we have time afterwards, I will also try to hang around for a few minutes and answer questions. My family will probably be getting home. So if you hear a little ruckus in about, 30, 45 minutes, that's what it is. But if I have some extra time at the end, I will stick around and try to answer questions. If not, we can follow up in group me. First of all, the disclaimer as usual, please do not share any of this presentation with the public. No WeChat, no Facebook, no screenshots, nothing like that. This is for internal training purposes only. Also, any numbers that we talk about, especially we're going to talk a little bit about historical returns and everything, anything like that. None of that stuff is guaranteed. So past performance is not indicative of future performance. So just remember that as we're going through this, that this is not a guarantee and this is not a representation of what's going to happen. So with that being said, let's kick this thing off. And I'm going to do that with a Jack Wu quote. So it's the boring things that make you the most money. So I strongly believe in this. I shouldn't say a lot of people, but some people say my trainings are boring, but they are full of knowledge. And it's the engineer mindset. I have to break things down. I have to know what's going on in the back end. I have to know the details so that when I get those questions to the client, I have the confidence to answer those. So I am going to show you a lot of details and I will probably go a little bit quicker. But like I said, write down your notes, write down your questions. And that way you can follow up with them either by watching a CTO video to catch up on that, look at a product guide, reach out to us, reach out to your upline, whatever it is you need. Just know that that community is around you to support you. All right. So we're going to start off with some objections, some common objections that I got when I was first starting and how I would handle them. And first of all, why do customers buy our life insurance? Well, this is going to be that puzzle. So people buy life insurance mainly because they're afraid that if they die, they're going to leave some kind of debt to their family. And we have to have that need before anything else. So there has to be a need for life insurance before we can sell life insurance. And that goes beyond the riders, that goes beyond lifetime income benefit rider, that goes beyond combo multi-choice rider, any of that stuff. We have to have a need for life insurance first. After that, we can do the die too soon, to live too long, and to become too ill. And that's when we add our living benefits onto the life insurance. Remember, these are riders that attach to the life insurance. But without that base policy first, we can't attach riders to it, and we cannot underwrite or sell only riders. So we have to have that need suitability and need for life insurance before anything else. So a common objection I get, I don't need life insurance now, but some considerations for you to think about. Are you healthy now? Should we lock in your rate now? Should we start you on a term now and convert you later? Should we start you on a lower IUL now and ratchet you up with the gap writer? We have all of these solutions, but the most important thing is if they are healthy now, we can get them a better price. They're going to be able to start building up that cash value and building up those accelerated benefits so that they can use them when they need them instead of trying to start a life insurance policy when you're starting to get older, you're starting to get sick. Then it becomes problematic. Your costs are going to be higher and you might not be able to qualify. Second question, if somebody ever asked me, why do I need this now? I always ask them, would you drive your car without car insurance? Why not? Would you own a house without house insurance? Why not? We do these things to plan for the unexpected. We don't know when the next hailstorm is going to take out our roof. We don't know the next time a guy is going to blow through a stop sign and T-bone you, right? It's not necessarily that you're going to do something, but we have to be prepared for the unexpected things. And that's what life insurance is at its core, is to protect us from unexpected. And a lot of people don't think about that. So I usually try to bring up those two questions because those are insurance that a lot of people feel like they have to. Well, most states, they require you to buy car insurance. Your mortgage people will require you to buy homeowners insurance to protect their mortgage. But the point being is you're protecting against an unexpected event. And that's exactly what we do. And then the last one, do you have people that depend on your income? So if something were to happen to you, does your wife have enough money from her job to cover everything in the household? Can she cover your medical bills? All of those things that we need to not scare people, but we need to bring it to their attention and have a conversation on how to plan for those things. Next, why don't I buy term and invest the difference? I get this question a lot. Okay, do you have time to study the stock market and how it works? So a lot of people will cite that I can invest money in the S&P 500, or I can pick individual companies and I can beat the returns you're showing me. True, you might be able to beat them, but are you taking in consideration if you get sick or hurt and you want to take that money out, what's going to happen? What are the tax implications of you taking out that money after it's gained in the stock market? What if the stock market plunges when you get sick or hurt and you lose 20 or 30%? Or what if the market is down when you need money? Right. So we need to, you're not going to necessarily convince somebody right away. And I've had people walk away on this question, but I told them everything that, to think about when you're planning and make sure that you're taking those things into consideration, because if you can save that asset and not leverage it now and save it for later and use your life insurance instead, that's not a bad thing, right? Because a lot of other things, they have penalties or they have, withdrawal penalties or taxation that are involved with them, or you don't want to take out money against your house and then create another mortgage or a HELOC, whatever you try to do to help yourself during that difficult time. Why don't you use your life insurance instead? Or why don't you make a plan that includes life insurance so that if something does happen, we have a solution and we have an option for you so you can maintain your assets. Why is life insurance so expensive? Well, first of all, leverage. That's the biggest thing you're doing when you buy a life insurance policy. You are leveraging a very large asset to protect you with relatively low money considering what you're getting. So when I first started my life insurance policy in 2019, I was 36 years old and I was $806 a month, but I was leveraging $1 million policy. And if I were to take that same $800 a month and save it by myself, it would take me over 100 years to get up to that $1 million. I'm not taking in like interest or anything like that. But if I were just to put $800 in my mattress every month, it would take me 100 years to save for that $1 million. So by putting that money up front now, a little bit of money, I can leverage the benefits or the potential benefits of that $1 million with a smaller amount of money. And that's the leverage concept there. Cost of insurance. So again, we talked about starting your insurance when you're younger, while you're healthy. because the longer you wait, the older you are, the sicker you are. If you have pre-existing condition, the more your cost of insurance is going to be and the higher the price your policy is going to be. And then we can offset that by overfunding your policy. So there are some mechanisms. There's something called, if you want to write this down, it's called net amount at risk. If you look up that term, that's how the insurance company calculates how much money they're going to charge you. So it's going to be based on your age, mortality tables, and the net amount at risk with the company. So if you're overfunding your policy with additional money, you are offsetting the net amount at risk, therefore lowering your cost of insurance. So just something to keep in mind. It's expensive, relative to your paycheck, but when you look at what you're getting, if you can make a solid plan that works and is suitable for a family or for an individual, we can definitely offer them an option if something were to happen, or if something doesn't happen, we plan for their retirement. I don't like the guaranteed elements of the IUL. And I will admit, the first time I saw this, I was nervous, right? We see that big L word there, that lapse, and it's scary. But you have to know how to explain that to your client or your customer to reassure them what this means and what this is. So very few investments can guarantee you a massive growth. Anybody that says I guarantee you X amount of dollars, in X amount of years, I would be very skeptical about that. So we offer 3 different views of potential growth over time. Current illustrated is going to be the one you see by default on your illustration software, and that's going to represent roughly a 6.4% average return every single year. The alternate is going to be around 3%, and the fees are going to be higher. But that guaranteed one is super scary. But if we look at the fine print here, the guaranteed illustrated rate is calculating at 0.10%. So this is the absolute worst case scenario. And they're also using the maximum monthly deductions. So you have limits set in the data section of your policy that tells you this fee cannot be more than this amount, or this charge cannot be more than this percentage. So this is assuming that all of those things are set to maximum and the index is returning 0.10%, which if we look historically has never happened, right? It's never happened with the history of the stock market, but we still show that as a worst case scenario to the client. And we do need to mention it, right? It's part of suitability. It's part of disclosure. We have to show, this is what we, a good idea based on historical values on our current, but, this is the absolute worst that it can be, right? So just having the confidence to have that conversation with your client and to show them those, show them the fine print and show them this is what it's being illustrated at. And this is the worst case with the highest fees. And it's, you can show them this historical return chart as well to show them this has never happened, right? We're not going to see 0.10%. Oh, I can't guarantee that, but generally speaking, it's not probable for it to be 0.10%, indefinitely. And that's what the guaranteed illustrated values are showing you. So have the confidence to stand by your product, use that current illustrated, use the guaranteed, and have the confidence to explain to them what that is, because your product is solid. If we look at the 20-year return on our pace setter, that's 15%. Now, I can't guarantee you're going to get 15%, but that's a pretty darn good return while still having all the living benefits protecting you while this money is growing. And on top of that, in year 6, we get another little interest credit bonus, which is another addition that we give to our clients just to help their policies grow even more. Okay. So what are accelerated benefits? Accelerated benefits are a way we can receive a portion of their death benefit while still alive. This amount is going to be discounted. So just because I have $1 million policy, if I make a claim, that does not mean that I'm going to get the full $1 million in every single case. There's many different factors that go into that. The money received is most often used to cover expenses related to specific severe medical conditions but there is nothing that says you have to use this money to do this thing. There's only one state that does that, and I believe it's Massachusetts, and they do some kind of reimbursement thing. But other than that, generally speaking, most of the other states, you can use this money for whatever you want. Riders are automatically issued if insured qualifies. So as long as you check all the boxes to get the riders, you qualify for the base policy, because we need to have that base policy first, and we need to have a need for that first. And then if they qualify for the riders, we will attach them to the policy. And then most of our riders are ABRs and stuff. There's not going to be any additional charge for those. And then use of benefits is unrestricted. That's what we just talked about. And then Massachusetts is that state that has that exception. ABRs are not a replacement for medical insurance. This will not cover medical bills, okay? This does not replace disability insurance. This does not replace Medicare supplement or LTC long-term care. So do not market this product to your client as a replacement for any of this stuff. It is life insurance with living benefits, okay? We can offset medical expenses, but you should never tell your client to stop paying your medical insurance and just get my policy. Don't ever do that. That's very bad, okay? So just never market your product like this. This is kind of fun. Top 10 ABR claims that are not ABR claims. I got this from the certified living benefits training, and I thought this was kind of funny, so I included it. So these are actual claims that people have submitted to National Life Group, but they do not consider them ABR claims. So if you have a client that is doing this, I would highly advise you to tell them not to do this, because it's a huge waste of their time. Broken finger, broken ankle or toe, back pain, hysterectomy, pregnancy or post-pregnancy, broken elbow, joint or knee pain, hernia repair, gallbladder removal, or fibroid removal. None of these qualify as ABR claims, but they are the top ABR claims that NLG has received. So just don't do these, okay? Save everybody time, save yourself some time, save your client some time. We cannot really help them with any of these. If you have a special circumstance where it's really severe and maybe you think you can activate the chronic, I would talk to your upline first and hash it out, and then maybe you can come up with something to submit a claim, or even call National Life Group first before submitting anything. That way, again, we're not wasting their time, we're not wasting your time, because the more we tie them up, it slows the whole system down and everybody suffers. So the better we all do at this, the smoother the entire process works with National Life Group. Okay, underwriting ABR. So terminal ABR only for customers issued Express Standard 2 or rated above Table 4, only the terminal ABR is available. So if they do get that substandard, you might hear it called ESNT1 or ESNT2. If they get 2, they're going to lose all of the riders except for the terminal. Make sure you're asking all of those health questions on that questionnaire. It's very important that we get the best idea of their current health situation, past and current. So, you know, the customer might not always be as truthful to you, but if you walk into a house and it smells like cigarettes and they got a pack of smokes laying next to you and you're sitting there filling out their application and they say, I'm not a smoker. Okay, you got to have the ethical, you know, wherewithal to make the right decision in that moment, and just, you know, let them know if anything happens, they can rescind your policy. So if they find out, you know, they have 2 years to rescind your policy in the contestable period. So it's just best if we do our due diligence and we fill out these questions ethically, and we're not clean cheating our clients. ABR, adding ABRs. So ABRs may be added after the policy is issued with full underwriting required. So, you know, they could get one of their ABRs taken off during the initial application process. But if they improve their scenario or their situation and the doctor gives them a clean bill of health, you can submit that to National Life Group to see if we can put those back on for them. Okay. So that is an option for you. If you did have a client that lost one of their ABRs or all of them and their condition is improved, we can always re-explore that after a year or two and see where they're at, and potentially get those put back on there for them. ABRs are designed for future protection, not for covering pre-existing conditions. So again, that brings us back to the medical accuracy. So, we need to make sure that we are filling out to the best of our knowledge that, nothing is currently going on, or if something is currently going on, we're getting all of that information. We're getting the medical records, we're getting prescriptions, and we're getting that information to National Life Group with the application. Because 9 times out of 10, if you have a severe condition, you have a severe condition, and you should have some documents that will explain what is going on. So as long as we're forthcoming, I actually had a lady about 3 months ago who was a cancer survivor and who had been clean for, I think it was 8 years or so, or 10 years. And I got her approved at standard. Okay. We put everything out there. We put her medical information, all the medicine she was taking, doctor's notes. We provided as much as we could. We got some stuff back from underwriting that we had to answer, but we answered everything truthfully and we got her approved, right? I can't guarantee that's always going to happen, but if you're putting that good faith effort forward, National Life Group is going to reciprocate that back to you and try to work with you to get this person qualified. So being honest and upfront at the beginning is always going to provide you the best possible outcome, because we don't want to take a chance for a client making a claim and then they find out that they didn't tell them something. Then they rescind the policy, give them their money back, and basically say, well, you're on your own. Because that's what'll happen if we don't do our job. So let's do a really good job with these health questions. Okay. ABR payout limits. So maximum benefit for terminal, chronic, and Alzheimer's 1.5 million. Critical is 1 million. Benefits paid under all ABRs aggregated up to the maximum amount. So this is not a per event amount. This is cumulative between all policies on a single life, per life. So even if I have policy A and policy B, that does not mean that I have 3 million in terminal and 2 million in critical. It's cumulative for my life only. Hypothetical example: if we have a $4 million face amount, customer qualifies for critical and receives $750,000 payment, reduces the face amount to $2 million. So they took 50%. Customer comes terminally ill and elects terminal illness benefit rider. Maximum potential offer then would be 750,000, which brings us up to the 1.5 million. So that's kind of an example of how you could use both of them, but we're still not breaking any of these limits. Once the payment, like I said, once the payments are received by the customer, they will not be able to make any other accelerations on any other policies if they've hit these limits. All right, let's go into the terminal illness rider. So this is probably going to be rehashed for a lot of you, so we're going to go kind of quick here. Diagnosed with terminal illness, expected to pass away within 24 months. There's no waiting period for this. This is a lump sum distribution. They can go up to 100% on this. It's going to depend on the severity of the condition. Funds can be used at the policyholder's discretion. Again, nobody can tell you how to use this money. Maximum lifetime benefit payable is $1.5 million. Chronic illness: if you cannot perform 2 out of the 6 daily activities for a period of 90 days or more, and these are the 6 daily activities, and you can accelerate money based on that. Well, how does that work? Or we can also do cognitive impairment as well. So you need the cognitive impairment section requires substantial supervision to protect oneself from threats to health and safety due to severe cognitive impairment. This can include short-term or long-term memory, loss of orientation, people, places, or time, or abstract, deductive or abstract reasoning is impaired. So we do cover some mental issues with the chronic illness rider. We're going to talk a little bit more about this later when we get into the Alzheimer's. Now we're going to look at how the chronic illness rider pays out. So the maximum acceleratable amount for the chronic illness rider is 2% of the face value of the policy each month. So an example of that with discounting, if I have a $200,000 face amount and I accelerate 2%, that's $4,000 per month. I do my discounting because I'm getting the money before I die. I'm getting paid $2,700 per month. The remaining face value is then paid as a death benefit. Policy will be depleted in 50 months. So if you do that full 2%, you can do 50 months of payments with that particular rider. The customer has the option to elect or accelerate less than 2% to extend that benefit longer if they wish to bring that 50 months longer, or they just want to trickle the money a little bit slower. So they do have the flexibility to change that amount. And just remember, we do not refer to this as replacement for long-term care. Very important. Please do not do this. There is a recertification period with the chronic illness rider as well. So you will get a 12-month block of payments. And then after that 12 months, you will need to recertify and you will have to qualify again under the same conditions, 2 out of the 6 daily activities, all of that stuff. If it's continued on, then you would just recertify, tell them nothing has changed, and then you can make that next 12-month acceleration. Alzheimer's disease rider. This is paid as a lump sum distribution discounted from the death benefit. So unlike the chronic illness, which is the 2% of face amount, this is a lump sum distribution up to $1.5 million. This must be diagnosed by a specialist of Alzheimer's disease or Lewy body dementia. These are some of the things that will qualify you for this particular rider. And then all other forms of dementia are excluded, including self-inflicted things like alcohol or drug abuse, strokes related and vascular. If you overdose on medication or any other dementia associated with Parkinson's disease that is not covered under this rider. Maximum issue age for the Alzheimer's disease rider is 60 years old. There's a 30-day waiting period from policy issue. And this is available on all active life products and cannot be added to in-force policies. But I believe they changed that. So I'm going to rescind what I just said right there. So all riders issues subject to underwriting, not available in all cases, rated express non-tobacco 2. We talked about that. So they will not have this if they have ESNT2. And then not available on specialty cases, probably not going to apply it to any of you guys, but it is one of the exclusions here. And then of course it has to pass underwriting for them to get this particular rider. Alzheimer's disease versus chronic. While this loads, I'm gonna take a drink. Okay, customers can choose which rider suits their needs. So again, we talked about the 2 different types of payments for each of these riders. The chronic is going to be payment over time, and the Alzheimer's disease is lump sum. Electing one does not terminate the other rider. So you can start, as it says over here, you can start with the Alzheimer's and go to the chronic, or you can start with the chronic and go to the Alzheimer's. So as long as you qualify for both, you can make that decision. If your Alzheimer's is not quite there yet, maybe you start with the chronic illness because you need that assistance. And then if your condition worsens, you can do a lump sum later with the remaining acceleratable amount on your policy. Critical illness. So here are the triggers for critical illness. This benefit is based on the reduction of life expectancy due to the qualifying condition and successive treatment. So these accelerated amounts are dependent on how much whatever condition you have affects your life expectancy. So one could assume that if you're making a blindness claim, it's probably not reducing your life expectancy as much. So you're probably going to see a smaller accelerated benefit. Now, on the other hand, stage 4 cancer, this could be much more affecting your life. And that would mean a larger accelerated benefit for you. So just remember that they calculate this a lot based on how much it affects how long you're going to live. Okay. And then maximum lifetime benefit is $1 million. There's a 30-day waiting period. And then make sure you check your state qualifiers and triggers, as they may differ from others. So some triggers might not be available in New York. Blindness, there's some states that do not use this as a qualifier. So Connecticut, Illinois, Kansas, Maryland, Minnesota, New Jersey, New York, Ohio, Virginia. If you're in those states, just make sure that you're checking your guidelines and that you can offer this to your client or not. I am not in those states, so I don't remember off the top of my head if they are there. But if you are in those states, just make sure you check your benefits before you offer those. Critical injury underwriting. So does your occupation matter when underwriting for critical injury riders? The answer is no. So even if you are, what are they, the high steel workers or the linemen that do the electrician stuff, or the guy that goes to the top of those big windmills and those really dangerous jobs, they're not gonna knock you for that when they're doing their underwriting. But if you are doing base jumping, cave diving, spelunking, all that stuff, if you are doing those extreme sports, and there is a record of that, they're going to use that as a risk classifier when writing your policy. So that will be taken into account with your nexus, whatever they do for their risk classification. Critical injury triggers: coma, paralysis, severe burns, traumatic brain injury. I usually tell people these are common things that happen during a car accident. So again, we're planning for those unexpected things. And this offers us, that compared to a lot of other carriers, this really kind of brings us apart even more by offering these injury triggers as well. This benefit is based on reduction in life expectancy, just like the other one. Maximum of $1 million. There's a 30-day waiting period. The customer does not need to take the full amount. You can do partial, you can do, a little bit, whatever the client needs, we can make a plan for them. Multiple claims can be made if the full benefit is not taken, if it is a different condition, or same condition if diagnosed as a different event. So I have, let's say, heart attack 1 and heart attack 2. Those are the same condition, but they're different events. So you could technically make a claim on both of those as long as your policy can support it and you have enough death benefit available in there to accelerate. Critical injury, illness and injury ABR claims, survivable conditions. So some people ask me, why do they have a survival period in these particular ABR claims? Well, the main reason is they don't want you to pass away after they've accelerated living benefits. Because if you're going to pass away, your family is going to get a lot more money from the death benefit compared to a discounted accelerated benefit. So a lot of people, they don't want to wait, but they think about it, it would actually be better for their family if something unfortunate was to happen to them. They would be able to pass on more money than if they accelerated it like the next day and then they passed away. They're leaving all that extra money on the table that they could have passed to their family. So that's the main reason why we have survival periods when we're talking about some of the critical illness triggers. Critical illness and injury ABR claims. So critical event must meet conditions set forth in the policy. Obviously, condition may have requirements for the benefit to be paid. So once you submit your claim, more than likely, if you're within that 2-year contestability period, National Life Group is going to ask you for a plethora of information about the client. APS will probably be pulled. Additional documents might need to be given to them. So just make sure that you're, helping your client during this difficult time to get any of those requirements to National Life Group so they can make an informed decision for that client and help them with their claim. And then acceleration based on policy values as of the date of application for the ABR. So the day you apply for that ABR, whatever that's post dated as, that'll be the values that they use for the ABR claim. To claim or not to claim. So this is kind of an interesting slide here. So the reason I put this here is because I don't want you guys to get tunnel vision when you're talking about living benefits. Okay. There's some circumstances or some events where it might make more sense for the client to loan against the cash value as opposed to making an ABR claim. So let's say we talked about this earlier, but if it's not affecting your life as much, maybe you take a policy loan instead. You know, maybe you can get more money out that way, right? So we have to make sure that we're looking at all of the factors, and we're not just saying, okay, you have cancer, go do this. No, we have to look at the policy values. We should run some in-force illustrations. We should contact National Life Group, and we can find the right solution to fit that particular client's need at that time. So I love the ABRs, but again, they might not always be the best choice for the particular condition that you're dealing with. So always remember in the back of your head, you do have, if the client has cash value, you do have those policy loans available to you. So just remember, just make sure you're talking to them about that, or you're keeping that in the back of your mind when you get your first claim, or if you have a claim where, you know, they submitted it to National Life Group and they said, okay, well, we can give you, you know, a little bit of money here because it's not really affecting you, but maybe they have a lot of cash value they can borrow against. So just keep that in mind when you're dealing with claims, as we do have some flexibility with those policy loans to get the money out of the policy for what they need. Fertility Journey Rider. So this is one of the new riders on Defender. So this gives you an AV credit to the basic strategy, and it is 3 times the greater of the minimum monthly premium or the minimum guaranteed premium. So this is not a direct payment to the client. This will be credited to their basic strategy, and then it'll be swept into their account on the sweep date. And then if they're over, then it'll go into the strategies. If not, it'll help pay for their insurance costs for that particular month. So it's just another little bonus that we give to our clients to show them that we care. And this can be used by, this will be on the husband or the wife. So, you know, if the husband gets a policy and the wife doesn't, the husband will still have this rider, and they can still use that if they qualify for, you know, if they're trying to do the fertility, what is this? The fertility related laparoscopy. I can't even say it, hysteroscopy, the IUI, the IVF stuff. So if they qualify, even though the husband has the policy, they can still get this credit on his policy if she's doing the fertility treatment. So that's another great little bonus for this rider. The policy must be active for at least 2 years. There's no cost for this rider. It'll go on any policy regardless of risk or rating. And then no additional cost either for this. So just another little benefit that we offer our clients. We are almost there, guys. This is number 30. So we're going to have time to talk after this. Combo multi-choice rider. Okay. So this is really cool, and I've used it a few times, but this is a very flexible tool that you guys should be using, or at least bringing up to your clients, both, you know, personally, and if you have small business owners, this could be a great option for them as well. So this allows you to attach a term policy to your base IUL policy, and these term policies can be up to a cumulative total of 3 times the initial face amount. So if I have $1 million base policy, I can attach 3 $1 million policies, term policies, to that IUL. Now, there's many different ways we can use this. One common way that I've been structuring this is if somebody wants to use their IUL for a death benefit / retirement, and they want to use this term policy for accelerated benefits. So that way they don't need to touch their cash value. They can tap their term if they get sick or hurt. If not, it just drops off when it's done. And then they still have their cash value. They still have their living benefits, and they still have their retirement potential sitting there waiting for them when they're done. Another way we can do this is if you've got, let's say you're an investor and you have a base policy, $1 million, and you go buy a $1 million asset, let's say a house, and you get a mortgage on that. Well, you can attach another term policy to your IUL to cover that mortgage while you have it. And then when it's done, drop the term, or you keep it if you got a few more years. So again, you have the flexibility to use these term policies to fortify that base policy. And the great thing about this is that each of those term policies gets their own like ABR limit. So base policy has 1.5 million and 1 million limits. Then each of those terms will each have their own 1.5 million and $1 million limits for the living benefits on all three of them. So they don't share those limits between all of them. They each get their own. And then on top of that, if you're putting this on another person and they want to split off and convert to a permanent product, we can do that for them as well. So in the 20 and 30-year terms, we can split them off into a permanent product without additional health qualifications. So this is a great way to, strategize, just try to think outside the box. How can I use this for the situation that this person is giving me so that we can come up with a solution and a plan that fits their needs and their suitability? So I was going to have this as our time permitting. So I'm going to open up, I think now, if you guys have any questions or if you had any like objections that you're getting that maybe we could tackle. And we can do this for, 15, 20 minutes, whatever you guys are comfortable with, but that's what I have for you tonight.
Any questions?
Well, I'll ask a question. I see this sometimes. The waiting period for any of these riders, does that begin when it's diagnosed or when you apply for the benefit?
The waiting period is that from the issue of the policy. So 30 days after issue, then you can make a claim or whatever they were before.
Oh, so
is that what you were asking?
If you're 2 years into it, and for example, you said they get some kind of illness, a heart attack or cancer, and they're going to put a waiting period on when you pull the critical illness.
This is a policy issue, yeah. So the policy must be enforced for 30 days. So I
get that part. I'm talking about, you said they don't want you to pull money for your living benefit and then turn around and die 2 months later, 3 months later, and then you lose out.
Okay.
Yeah. So that waiting period, is that from the time that you apply or from the time that it's diagnosed?
It was this one, right? 30 or 90 days from the date of diagnosis.
Okay.
Yep. Good question. Anybody having any objections, any difficult people that you walk out of the appointment and just like, God, this person is just ridiculous. So I've done that too. So anything like that?
Daniel, there is a question in the chat. Jenny's asking, can you run one policy with CMC which combine with term? So if time permits.
Oh, she wants to see a live illustration. Okay.
Yeah. Okay. Yeah.
So Brad, if you can like sing me in or something, I'll get logged in here.
Daniel, I have two questions.
Sure.
Yeah. The first one regarding to the CMC, you just mentioned the IUL and the term, they have separate payout limit for the limit for the APR. If this mm, refer to the insurer and the term are different people. If they are the same, if the term is same as the insurer, if they still have separate limit, more than 1.5 million.
No, remember I told you the payout limits are per life. So even if you are the insured on both the IUL base policy and the term, you will still be subject to the per life limit of 1.5 million for terminal and Alzheimer's and chronic, and 1 million for criticals.
Really?
Yep.
Oh, thank you. Thank you for your
Yep.
clarification. Yeah, the
Remember,
other question.
remember, payout limits are per life, not per policy.
Per life, then which means that if the term and the insure and the IUL is the same owner, then it will be limited to 1.5 million.
Correct.
Okay, yeah, then it's slightly different from what you just explained. Okay, yeah, the other question regarding to if my prospect want to is shopping for long-term care. However, we cannot say that our APR can replace the long-term care or supplemental to the long-term care. Then how can we sell IUL to the prospect shopping for long-term care?
Well, it would be something completely different. It's kind of like I'm going to buy car insurance and house insurance. So you can technically supplement the long-term care, but you're not replacing. Never say buy this instead of long-term care. But the money you can get out of the policy can be used for whatever you want. So you can supplement your medical insurance if the bills are high. You can supplement your long-term care if that policy is not covering everything. But you cannot replace medical insurance and you cannot replace long-term care.
Yes, so we cannot say the APR can replace long-term care. However, we can say that APR can supplement to the cost or requirement of long-term care.
If you use the supplement strategy, just make sure you say the first part also. Say, I can't replace your long-term care, but if you qualify under one of these riders, we may be able to accelerate some money to help you pay for some of your bills during the time when you're needing this long-term care.
Yeah, if this is the case, probably the prospect probably will go away.
Right. Okay. All right. Can I confirm you guys can see the illustration here?
We can see it.
Beautiful. All right. So we're going to set up a basic. Do we have any other cues for what they want to see?
Negative.
Age, face amount, anything like that?
Nope.
Can that person, who was it?
Jenny Chen.
Jenny, can you unmute? We can talk through this.
Yes.
Do you want to see a specific age or face amount?
You just run the one illustration so I can see how
okay.
to add in the CMC.
Sure. Okay, so this
Thank
is your
you.
client
Thank
info. This is normal. You fill out the gender, name, birthday. So your CMC is going to be under the rider section here. So once you go in here, you'll see the combo multi-choice section. You're going to add insured right here. That's going to bring up another window. Now at the top, you will have to have an insurable interest on this person. So spouse, child, parent, grandparent, business partner, extended family. So you choose the proper one. Let's say you're doing it for your child. Let's say they're 10. You can choose a rate class. They'll be standard because they're under 18. They should not allow us to do that because under 18, you will not be able to get elite.
This meeting is.
Just an adult child.
Right? And then I've got this set to 100,000, I believe is the default. So I think we can, I'll just leave that there. And then you can do 20-year or you can do 30-year, and that will obviously be more expensive if you do the 30-year. Then you hit OK. And then it's going to load very slowly.
This meeting is being recorded.
Oh, I need this to be 18. So there's your first CMC. So if we go to the death benefit and I put this to, actually, no, I can leave that there. So because that's 100,000, I can add 3 more or 2 more. So now my total coverage under CMC is 300,000, 3 times the base amount, which is 100,000.
They got 2 spouses, so they're from Utah.
There you go. Yeah. Reach out to your Utah folks. This is going to be great for them. And then once you go in here, you should see the CMC sections now that we've activated it. Where'd that go? Combo. There you go. So there's all your coverage right there. Okay. Any other questions? Anything difficult you guys have been dealing with?
Yeah, I've got a question. You pointed out earlier numbers on the discounting, and if they're going to take $4,000, it's discounted for a chronic illness. It's discounted to 2,700. You showed in that slide. So when we're running illustrations for people that are max funding their IUL and they got a couple $1 million death benefit, and they're maxing out on the ABR illustration page like $30,000 a month, is that $30,000 a month net or gross of that discounting? In other words, does that 30,000 already include the discount, or is that before the discount and they're not really going to get the 30?
They're putting in 30,000 a month?
No. But if you max out your policy and you take the maximum chronic illness is $30,000 a month.
Okay.
So if the illustration shows it that you can get $30,000 a month, is that after the discounting or before the discounting?
It should be after, but again, those are estimates. So it's every case is different. Every claim is different. All the ratios are different. So it's hard to guarantee you what that's going to be, but what we see on the illustration is discounted.
Sorry, discount. Okay.
Yep.
Hey, Daniel, I have a question. This is
Shoot,
Mike. So it's kind of related to the long-term care rider. I know that our NLGs is a chronic illness. It's not really long-term care rider. There's talks about like having W-2s being withheld because it needs to be a long-term care rider in order for it to count as having long-term care, so that you don't people that are receiving W-2s don't need to have that withholding. Do you know if there isn't any talks about changing the description or making it a long-term care? I'm just asking whether or not that's
So at the EFD Academy, I think that was 2 years ago, I asked David face-to-face, one-on-one, what his next move was going to be. And he hinted they might be going after long-term care. So Other than that, I cannot say anything for certain. I have no other information besides that.
Got it.
I know
Thanks.
they're David's looking for the next thing, right? He's not gonna leave this alone. This is a third policy iteration since I've started. So I started on the original living life, the living life product, and then we had living life by design. Now we have living life defender. So he's not going to stop innovating, and that's why we're going to stay number one and why we're going to stay the competition for everybody else. So I'm confident that whatever he's working on next, it will be relevant to the market. And I would say there's a high probability that long-term care would have something to do with that.
Yeah, I mean, this is a big deal actually, for anybody that's either looking for a long-term care or having it as a description for long-term care, just because we don't want to pay the additional taxes, right? And the withholding if we do have this. So it
Mhm.
makes us competitive, I guess.
Yeah.
But thanks for that
No
information.
worries.
And if I may add, if you don't mind, it may also be a big deal for all of us agents too, because to the best of my knowledge, and I'll double check this as well, but I believe to provide something that's labeled long-term care, you have to be not just life, but you have to be health licensed as well.
That's
So that'll,
correct.
One other consideration too is if it's a payroll deduction, it might be then considered a qualified plan. So all of that's going to have to be worked out and figured out on the back end too. So yes, we can sell, life insurance to a business and do it through deductions and everything, but that changes how taxation works and everything with life insurance. So that's a big consideration, I think, and what they're working out on the back end is how they can maintain the tax benefits while still offering that long-term care or some kind of hybrid between those two things.
Daniel, I have a question. For example, if you started solving for income at a later age, like close to retirement, and then somehow in the middle of it, somehow the prospects had has to file a claim about some illness or something, would that still work if
Yes,
they
it'll
already
just
triggered?
because when you're doing the solve for income, you're actually creating that loan collateral account. So
Mhm.
that will all be taken in account when they're calculating the ratios for that accelerated benefit. So yes, if you have been taking your income for a while, you will get less accelerated benefits, but that does not take away your ability to make that claim.
Or vice versa, like if you have filed a claim, somehow you still have some money sitting there, you can still do the solve for income later on.
Yeah.
Okay.
So if you're using the solve, the GLEAR works a little bit different with the chronic illness, I believe. But other than that, if you have cash value in your policy, you will be able to use policy loans and accelerations, back and forth.
Okay. Thank you.
I say GLEAR, I meant to say LIBOR. Sorry. I was talking to somebody about annuities today, so it's like stuck in my head. Anybody else? Anybody have any cool sales ideas they want to share? Any interesting case designs? I don't want this, we can make this as interactive as we want. It's our time.
So you're pretty technical. You and your wife is in the business, and you guys have like 8 diamonds between you. As a power couple, how do you manage your business? Who does? Is there a stratification as to who does what? Is she good at this and you're good at that, or are you just both so
Very
good
good at marketing. Very good at marketing. She does the social media stuff. We have a Facebook page, she's got a bunch of other stuff she does. So she's a finder. Is that what the finder? Yeah. And I'm the problem solver. So when the stuff hits the fan, I'm the guy. So Just managing all that, staying on top of the cases, training, helping people, understand their policies, training teams, and being part of this is great. I've wanted to work with English people since the day I started, and it's, being on Legend team, that's not always the easiest thing to do, but they're a great group of people and they've been so welcoming to me. So I have no complaints there, but just I'm glad to see that we actually have some momentum under this English team, because some people told me it wasn't going to happen at the beginning. So we'll just leave it at that.
It's good we have almost 60 people routine came online and listen to our English training. I'm really proud of you guys. And Daniel has done great job. And Dave, I understand your question just now. That's why, you have to recruit a girl, recruit a female under you, or you have to have someone, help you to do the finder thing. Because
Okay.
the Daniel is being very technical, and oftentimes I saw Daniel was surrounded by a bunch of Chinese, was asking questions. He's always being patient out there answering questions. So I think, if you can make 100,000 and another female can make another 100,000, if you guys work as a power couple, and you guys probably can make like 300,000. You know what I mean? There is always something called a synergistic reaction, because yeah, that's what I mean. But I know a lot of singles in our team, and it's better to, if you don't have a wife or girlfriend or whatever help you, it's better to, recruit a female in your team so that you can team up with this female and let them to do the finder job. But it's not 100% necessarily. But look at Jack Wu. Jack Wu is always, fighting all by himself, and he still make like, I would say like 15 to 18 million a year. And for me, I never paired with anyone, and I still make 1.6 or 1.7 million. It's really, depends your work ethics, and also how you work, how you manage your team, right? So Dave, your confidence is always there. I believe in you. You can make big, but always we still have to face their strengths. Their strengths. When you analyze Daniel and Arisa and work as a couple, still we have to analyze how they succeed so quickly, right? So fast. And English team is always our pain, because for the past 10 years we haven't touched a lot actually. Just to start from last year, we have Dave, we have Brad, we have Mike from West Covina office. Then now we have until now I organize the Evergreen English team. So last week, I would say last two weeks, I was in the East Coast. I went to Columbus, I went to Cleveland, I went to Kansas City. There are so many people out there. Actually, Chinese is a real minority, because a bunch of English team, bunch of people from English speakers, and like huge market. And the people from different races, they are all never heard about living benefits. And they are still looking for the opportunities. I call it like a raw market, and for me. So the market is absolutely huge. Like I said, we only touch like 8% of the market of the Chinese market, like 5 million people only, not even 5 million yet. And not even mention about, English team. You have to, English speakers, the majority. We are minority. Chinese are minority in this country. So I really wish, and I really hope all of us, we have a bright future. And if we work, be consistent, and do the persistency. So, you know what I mean? So thank you so much. If we don't have any questions, I really want to appreciate, Daniel gave us such thoroughly training. So if we don't have any questions, are we gonna take a picture?
Yeah, can I say one more thing, Wendy?
Yes, please.
You mentioned analyzing the rise, right? And I think I need to mention, and this is very important. Like you heard Wendy, what she was saying, everywhere she's been. You heard my story. It didn't happen from us sitting here not talking to anybody. This was a dark to dark thing for the first 3 years that we did.
Yes.
It was
Mhm.
extremely challenging on both the relationship, the family, timing, making time for everybody, sharing your time. So you have to find the goal that you have in your heart, because it might not be the same as ours, but whatever your goal is, you have to back it up with the work as well, right? And obviously there's no guarantees on success in anything you do, but without that effort and you getting your butt out there and doing it, as you told me, Wendy, the first time I ever met you, is you guys need to move your butts and you need to go talk to people, because nothing is going to happen unless you make that change and you start talking to people about how you can help them. And if you approach it with an open heart and an open mind and a true desire to help people, I believe you will find success. Okay. How much that is, I can't promise you, but you can get out there and you can help people. So just keep that and do your best and just keep moving forward, but set those goals and start working toward them. I mean, they tell us every single meeting, take your goal and split it up into small pieces and start knocking it out. That's all you got to do. But you got to have the effort behind it and the drive and the desire, because there is no ceiling to this opportunity. Okay. There is nothing that's going to tell you you cannot make more money and you cannot help more people and you cannot get another diamond or another promotion. That is up to you. Okay. And I'm going to leave you guys with that.
Okay. Now I saw David and Mike left a message saying, they are all excited to have another lady. So, which is good. And let me, before we take a picture, I just want to show you guys one thing. This is a US map. And Evergreen is the biggest team so far in the legend team. Okay. We almost dominate our entire team. 2 EFD team are both doing majority of the Chinese market. We're doing the California, San Diego, Irvine, and Los Angeles. And Bay Area, almost, it's a huge team in there. It was from Bill Hong's team. It's all Chinese. And in the New York, we have a huge team, a lot of people doing the PFA, this and that. That's it. Florida is ours, belong to Evergreen and Shane and Lei, but it's still Chinese team. And this few, and also Denver, Colorado, it belong to, Denver's market, and the founder is Daniel and Arisa. He's right here. So left the market is so empty. Then we have some English team in Arizona, some in Texas, and some of them in Washington. And this is it. And PFA has a majority of in the Washington, D.C., Virginia, West Virginia, and this area. But the left, everything else, everywhere else is completely empty right now. And I went to the Ohio, and we have a Chinese team all over the place. But the only thing is, look at the Kansas. And the Kansas City is the biggest city in the middle of the United States. Of course, don't worry, don't forget about Illinois, and Chicago is right here. In Detroit, and we Evergreen has all of the agents all over these places, but all Chinese. But English team, we never even touched it. We never even touch it. So what I want you guys to do is think big. I want you guys think big, dream big. Don't always only dream about whatever territory, only Los Angeles. That's small. That's still small. Like Dave, like Brad, you guys are, full-time hustler. Why don't you just, make more money, stop fly. Because I don't want you to fly and everything, travel expense is huge, but make more money, stop fly. Once you fly out, if you have a plant seeds in other states, just go to your leader and expand the market. You probably can easily dominating a market over there, right? Dominate the states almost. So people need the living benefits. People absolutely need the living benefits. Never heard about it. And people don't even know they need a financial opportunity. They want to make money. They don't have this opportunity. Okay. And this is what I mean. Because some of the people still, holding W-2. I don't know when you're going to retire. Lots of people say, I never want to be retired because you are actually hired to build someone else's dream. This is not your dream. And when I'm reaching my 38 years old, I sold my life probably next 20 years. Okay, I'm not going to work until I'm 60 years old, right? So next 20 years, I have to put my time in somewhere I really want to dedicate it to. I want to build my own dream. That's why I resigned as senior scientist from the biotech big pharma and become a full-time hustler in the San Diego market. That's why I become the #1 in the San Diego market and the founder. Now it's the time. It's your time. It's your time to shine. Don't be afraid. Don't always stick out, East Coast, West Coast, everywhere. Your team could be everywhere. Okay. We just need a union. We just need we cooperate together. We help each other. And we have this crusade as a living benefit. We just go across the country, and power of the buffalo is the herds. It's not single individual. This is all I want to say. Okay, go chase your dream. Always fight hard for your dream. Yeah, this is, you can do it. Everyone can do it. Like Daniel Arisa, Colorado, Denver is not a big place. I wouldn't say it's a big place, but still they have 2 offices being established under Daniel. Okay, so many agents. They used to be #1 MVP champion in the entire PFA. They made it big, actually. All right. So we'll see. There are a lot of places left out there, wait for us to explode. This is all I want to say. Yeah. Dave, you're gonna make 15 diamonds. That's too little. I have a big dream for you. At least, at least 20 diamonds or 30 diamonds, 40 diamonds. You can do it. You can do it. I can see the momentum. Okay. All right, let's take a picture, Daniel.
You want me to take it?
Yeah.
Okay.
Daniel, by the way, what are your client base? Like, are they most Asian or
Asian
mix?
small business owner. Yeah. We have a lot of small business owner families, the college plan stuff that Wendy always talks about. That is huge. If you have people with kids, never forget to talk about the college plan ever.
Mm.
Because you're leaving something on the table there. And I think those are probably the best case designs you'll ever see. So always talk about college plan. All right.
Thank you.
Okay, let me. How many pages? I got 3 pages here. So, and there's my dog. So I'm going to mute it here, but everybody, if you're going to turn your cameras on, turn them on. Oh, look who shows up. The other half. There's Jack.
It's a big finder. Happy birthday, Jack. Mhm.
Happy birthday.
Thank you. Thank you.
All right, here we go. 3, 2, 1. All right, I got 2 more pages. Hold on. I gotta try to paste these. Wendy, I'm going to send these to you directly.
Thank you, Wendy, for let us have a training,
Yes.
share the knowledge with everybody.
The big leader of Daniel showed up.
All right, second page. There's nobody's cameras on, so I'm just going to take a picture. All right. All right, go into the last page. 3, 2, 1. I think I got Brad twice.
That's good.
That's all right. All right, there you go, Wendy. I sent them all to you.
All right, what did Carol make it for you, Jack? Okay. Send
Do you have some
send us
dumplings
some
today?
picture of
Some
the food,
noodles?
all right?
Don't you have to have noodles on your birthday?
Of course.
Noodles, yeah, noodles.
Noodles. All right, all right. Thanks everyone. I'll see you next week.
Great. Thank you, Wendy.
Thank you,
Thank you,
Daniel.
everyone.
Thank you, everyone. Appreciate it.
you.
Bye, 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 bye.